Welcome back to Explain the Charts, everyone. Today, September 26th, 2025, we're tackling one of the most talked about instruments in the market, QQQ, the Invesco Nasdaq 100 ETF. It's been a wild ride for tech stocks, with recent news sending ripples across the entire financial landscape, and our charts certainly reflect that. Let's begin by understanding the broader market context based on the latest headlines. As of yesterday, September 25th, the Dow, S&P 500, and Nasdaq all fell for the third consecutive day, marking the longest combined losing streak since March. This downturn is largely attributed to mounting uncertainty surrounding Federal Reserve rate cuts, with Wall Street analysts reportedly reevaluating expectations for cuts extending into 2026. Economic data released yesterday showed the U.S. economy grew at an annual rate of 3.8% in the second quarter, higher than previous estimates. While robust GDP growth is typically positive, it dampens optimism for rate cuts, as a strong economy gives the Fed less incentive to ease monetary policy. This higher-for-longer interest rate narrative often puts pressure on growth-oriented tech stocks, which are a significant component of the Nasdaq. Conversely, just a few days prior, on Monday, September 22nd, the Nasdaq climbed 0.6%, with Nvidia stock surging near all-time highs following a major OpenAI investment announcement. Tesla also reached its 2025 highs around that time, showcasing the underlying strength and innovation within these key tech giants. Nasdaq itself has been busy, announcing partnerships with AWS to advance capital markets infrastructure, indicating long-term strategic growth. However, the immediate market sentiment, as we saw yesterday, is currently dominated by concerns over monetary policy and stretched valuations. Now, let's turn our attention to the charts and see how these narratives translate into price action for QQQ. Looking at the daily chart for QQQ, we can observe a powerful uptrend that has been in play for most of the past year. QQQ soared from around $440 in May 2024 to hit an impressive all-time high of $602.87 on September 22, 2025. This strong upward momentum, fueled by earnings and tech enthusiasm, aligns perfectly with the news of Nvidia's surge and Nasdaq's record streak earlier this month. However, the past few days tell a different story, reflecting the recent shift in market sentiment. Following the September 22nd peak, QQQ experienced a sharp pullback, with significant red candles appearing on September 23rd and 24th. The September 23rd candle shows QQQ opening at 602.37 and closing at 598.20, a clear rejection from the all-time high. The selling pressure continued on September 24th, with QQQ closing even lower at 596.10, indicating sustained bearish momentum. The high volume accompanying these recent declines suggests strong conviction from sellers. This rapid descent validates concerns raised by analysts about the market being short-term overbought and facing much higher than average valuations. To get a clearer picture of this sharp reversal, let's zoom in on the 15-minute chart, focusing on the critical period from September 22nd to September 24th. Here, we can see the run-up to the all-time high more intricately. On September 22nd, after a morning of steady gains, QQQ pushed higher around the U.S. market open, peaking near $602.87. However, as we move into September 23rd, the narrative changes dramatically. The 1331 Universal Time Coordinated Candle on September 23rd shows a substantial drop, with price breaking below the $602 psychological level, which had previously acted as strong support. This marked a clear intraday reversal as selling intensified through the day. On September 24th, the selling continued, with multiple aggressive red candles, particularly during the 1331 and 1546 Universal Time Coordinated periods. These moments saw quick drops from around 599.21 to 598.20, and then again from 596.47 to 594.53, demonstrating the concentrated downside pressure. The increased volume during these drops indicates that sellers were stepping in with force, pushing QQQ further down. The current resistance for QQQ, based on this short-term view, is around the $602 level, with immediate intraday resistance forming around $597 to $598. The breaking of these consecutive intraday support levels on high volume signals a significant shift in market dynamics. Now let's switch to the 1-hour chart, looking at an earlier period from September 8th to September 10th, 2025, to provide some contrast and context. During this time, QQQ showed a more stable, albeit slightly bullish, consolidation, trading mostly between $578 and $585. We can observe minor support forming around the $578 level and resistance around $585, with price testing these zones multiple times. Comparing this to the recent price action, it highlights the increased volatility and conviction behind the moves we've seen in the last few days. The relatively lower volume in this period compared to the recent sell-off also indicates less aggressive positioning by market participants. Let's synthesize these observations into a coherent outlook. From a bearish perspective, the recent 3-day decline, breaking through several short-term support levels, is concerning. The warnings about overbought conditions and the Fed's stance on interest rates suggest that the market may be due for a deeper correction. Further downside could see QQQ testing the $590 to $591 range, which acted as a support in mid-September. A break below that could bring us towards the $577 to $578 area, a significant support zone from late August and early September. On the bullish side, QQQ has demonstrated remarkable resilience throughout 2025, bouncing back from previous dips. The underlying strength of Nasdaq's innovative companies, coupled with strategic partnerships like the one with AWS, could provide fundamental support. A potential year-end rally could still materialize if the market finds a stable bottom, possibly around the 50-day moving average, though we don't have that plotted. It's visually around the 570 to 580 range on the daily chart. Should QQQ manage to reclaim the $600 psychological level and push past its all-time high of $602.87, it would signal a strong continuation of the long-term uptrend. However, the current sentiment, fueled by the Fed's hawkish tone and strong GDP data, suggests that short-term bearishness is more likely to persist, at least until clearer signals emerge. To recap, the immediate key resistance level to watch is $598.20, the close of September 23rd, and especially the $602.87 all-time high. On the downside, critical support levels are $596.10, the September 24th close, then $590 to $591, followed by the stronger support at $577 to $578. Our unbiased prediction suggests a 60% likelihood of continued short-term consolidation or further downside towards the $590 to $591 range, given the persistent Fed uncertainty and recent selling pressure. A break below $590 would reinforce a bearish outlook with a likelihood of 75% to test the $577 to $578 area. Conversely, a strong bounce and close above $600 would increase the likelihood of renewed bullish sentiment to 40% for another attempt at the all-time high. Longer term, the underlying strength of Nasdaq companies remains a significant factor for recovery, with a 55% chance of a year-end rally if current supports hold. Traders should keep a close eye on tomorrow's personal consumption expenditures, or PCE, price index, which is the Federal Reserve's preferred inflation gauge. Any surprises there could significantly impact market direction and Fed expectations. Additionally, ongoing efforts in Congress to avert a government shutdown could introduce further volatility or stability, depending on the outcome. Always remember to manage your risk and stay informed about these macroeconomic developments when making your trading decisions. Thank you for joining Explain the Charts. Don't forget to like, share, and subscribe for more in-depth market analysis.